Hi, everyone. Thanks for joining us today. In respect of everyone's time, we're going to go ahead and get started with our presentation, How to Cover the Cost of Long-Term Care. It's a question that we face absolutely every single day, and we're so thankful that Cameron Huddleston is able to join us today. She has a wealth of knowledge. She's an author, speaker, award-winning journalist with 20 years of experience writing about personal finance. Her work has appeared in Forbes, Kiplinger's Personal Finance, Chicago Tribune, MSN, Yahoo, and many more print and online publications. She is also the author of Mom and Dad, We Need to Talk. Before we get started, I want to give you a couple of orders of business. If you have any questions, please go ahead and type them into the Q&A feature of Zoom. Type out your questions, and we are going to save them for the end of Cameron's presentation, and we'll try to get to as many questions as possible. Additionally, with us today is Susan Berger, who is our trusted family advisor for Belmont Village. She has over 18 years of experience of being at the center of thousands of families transition into long-term care. She's able to answer your questions regarding Belmont, or if you just wanted to pick her ear about anything, she's super helpful and very kind. She'll be giving a very brief presentation after Cameron has finished her presentation. If you don't hang on for that, her number is listed right above my screen here, and that's 424-232-0701. And without any further ado, Cameron, thank you so much for being here today. We're excited to get started.
Of course. Thank you so much for having me. I'm really excited to be here and to talk about long-term care and how to pay for it. Not the most exciting of topics, but certainly an important thing to be planning for because more than half of adults 65 and older will need long-term care at some point, and it's very expensive, or at least it can be, and it does take planning to be able to pay for it. I just want to give people a little bit more information about me so you know who is sharing this information with you. As Jackie mentioned, I am a personal finance journalist. I've been writing about money for quite a long time. I did write a book about how to talk to your parents about their finances. I am also the director of education and content at a service called Careful with 2 L's. Careful is a digital platform that provides account, credit, identity monitoring for older adults. It also provides a digital vault and password manager. So essentially it can protect all of your finances in one place, and it can help financial caregivers, those who are helping with the daily money matters of an aging loved one, monitor their loved one's accounts and get alerts when Careful spots unusual activity in those accounts. And speaking as a former financial caregiver, it is really hard to stay on top of our own finances, but trying to stay on top of a loved one's finances is incredibly challenging. And so any tool that's out there to help make this job easier is a valuable tool. It's not a tool that was available when I was caring for my mom. I'm so excited to be part of the Careful team though, and helping, bring this tool to older adults and their caregivers. And as I mentioned, I was a caregiver for my mom who had Alzheimer's disease for 12 years. For the first 4 years after she was diagnosed, I was a hands-on caregiver, and then she moved into a memory care facility where she was for 8 years. And during that time, I oversaw her care and managed all of her finances. And so not only do I have experience writing about long-term care, but I experienced paying for it firsthand. And it took a lot of careful planning to stretch my mom's resources to pay for her care. I'm going to share my screen now, and we'll get started here. Okay, everyone see that okay?
Everything looks great.
All right, awesome. So I think most of you might know, but I'm going to tell you in case there's any confusion. What is long-term care? Well, it is a range of services to help people with what are called the activities of daily living. And there are six of these activities of daily living: bathing, dressing, eating, toileting or going to the bathroom, transferring in and out of bed, in and out of a chair, and continence. Long-term care can be provided in your home. It can be provided through community-based services such as adult daycare and assisted living facilities, memory care facilities, or in skilled nursing facilities. And this is really important. Long-term care is not covered by Medicare. Most people think it is. Medicare will cover stays in a skilled nursing facility for up to 100 days after there has been hospitalization and you need rehabilitative care, but it's not going to cover the type of care that you would need if you have Alzheimer's disease, if you have Parkinson's, if you have any sort of disease or condition or disability that requires assistance with those activities of daily living, whether it's in your home or in an assisted living facility or a memory care facility. So how do you actually pay for it? Because it's expensive. According to Genworth's annual cost of care survey, the median cost, this is like not the average, but the median. So it's like half of these costs are below, half are above. Median cost of in-home care is $4,506 a month for homemaker services, $4,680 a month for a home health aide. This is like a certified nursing assistant, someone who has a certain level of medical training, and this sort of home health aide service is prescribed by a medical professional. And so that's going to be more expensive than homemaker services. And this is just for 40 hours a week. If you want round the clock care in your home, the median monthly cost is about $19,000 for both of those types of care. Assisted living, the median monthly cost of that is $4,500. And because this is a median cost, you can expect to pay a lot more for this if you are in a place where the cost of living is higher. Skilled nursing can be incredibly expensive, $7,908 a month for a semi-private room, $9,034 a month for a private room. My mother's care over the course of 8 years when she was in a memory care facility, and even while she was in my home for a while and I had homemaker services, we spent more than $600,000 on her care. And because my mom did not have long-term care insurance, which I will talk about, the cost of this care came out of her own pocket. And so this is why it is so important to have a plan to pay for care, because how many of us have $600,000, $1 million, even $100,000 just sitting around to pay for this sort of care? The average length of long-term care for those who need it is 3.9 years. Women are more likely to need longer care, 4.4 years. More than 25% of Americans will have long-term costs of at least $100,000. 15% will have costs that exceed $250,000. So as I mentioned, my mom's costs were more than $600,000 over the more than 12 years that she had Alzheimer's disease. And I also want to reinforce this: more than half of adults 65 and older will need long-term care at some point. So don't think it won't happen to you. Don't think it won't happen to your loved ones. There are a variety of ways to pay for long-term care. All of these ways take advanced planning for the most part. There is long-term care insurance. There are a variety of ways to use life insurance, annuities, a reverse mortgage, self-pay, VA benefits, and Medicaid. So, what is long term care insurance? Long term care insurance is the only type of insurance that is there to specifically cover the cost of long-term care. As I mentioned, Medicare does not cover the cost of long-term care. Traditional health insurance does not cover the cost of long-term care. Long-term care insurance covers the cost of services that help with those activities of daily living, whether it's at home or in a facility. To receive benefits from a long-term care insurance policy, you must be unable to perform at least 2 of the 6 activities of daily living, or be diagnosed with severe cognitive impairment, such as Alzheimer's disease or a related dementia. The cost of a long-term care policy is going to depend on a variety of things: your age when you purchase the policy, your health, your sex, your marital status, the type of policy you buy, the benefits you want, and even the company you buy the policy from, because policy rates can vary a lot from company to company. And it's really important to shop around for a policy to get the policy that fits your budget and your needs. Now, the more you're willing to pay for a policy, the higher the payout you will get for the cost of care. And again, the payout, that benefit that you get, is going to be determined by, again, how much you're willing to pay for a policy. Just to give you an idea of how much a long-term care insurance policy will cost. These are average cost. Okay, so $950 would be the average annual premium, the average annual rate that you would pay if you are a 55-year-old man in good health and you buy a policy with benefits equal to $165,000. So you pay $950 a year and you get $165,000 worth of long-term care benefits. The average annual premium for a 60-year-old man in good health would be $1,175. Same policy benefit of $165,000. So you can see that by waiting to buy a policy, the cost is going to go up. The average annual premium for a 55-year-old woman in good health is $1,500 for a policy that pays out $165,000 in benefits. The cost of long-term care insurance is more expensive for women. Why? Because they're more likely to need it, and they're more likely to need long-term care for a longer period of time. The average annual premium for a 60-year-old woman jumps to $1,900. So as I mentioned, the younger you are, the more affordable it can be. The longer you wait to buy coverage, the more expensive it can be. Is it difficult to qualify for long-term care insurance? It can be. It can be next to impossible to get coverage if you have certain chronic conditions. And the longer you wait to apply for coverage, the more difficult it can be to qualify for coverage. Oftentimes, if you are 70 or older, you're not even going to qualify for coverage because you're at a greater risk of needing long-term care. And so when, insurers price these policies, they're looking at how much risk they're taking on to insure someone. And so if you already are showing signs of memory loss, if you've been diagnosed with dementia, it is too late at that point to get long-term care insurance. It has to be purchased while you are still healthy and relatively young. A lot of people tend to buy this in their early 50s, even in their early 60s, if they are still in good health. Now, long-term care insurance gets a bad rap because there used to be a really big problem with rate increases. Are they common today? Not so much. The reason that rate hikes with long-term care insurance policies were so common when long-term care insurance was new to the market in the late 80s, early 90s was because insurers hadn't figured out the risk. They were selling it at a rate that was too low, and a lot of people ended up needing their long-term care insurance policies. And so suddenly there was this panic. Oh my gosh, all these people are having to take advantage of their policies. We've got to raise rates to cover all these benefits that we're paying out. Now the long-term care insurance industry has things pretty well figured out. And so rate hikes are a lot less common today. That doesn't mean that they don't happen, but it's not as likely that if you bought a policy today that you're going to experience those rate hikes that were common when people were buying these policies back in the 1990s. Um, how do you keep down the cost of long-term care insurance? Because it's not cheap. It's cheaper than the monthly cost of long-term care, but it's not cheap. Buying young, getting a shared benefit policy. If you are married or you have a partner, a domestic partner, then you can get more coverage for less if you buy a shared benefit policy. This gives you a pool of benefits. And so let's say you are the wife and you get a shared benefit policy for 8 years worth of benefits, and you have to use 6 years worth of benefits, then your spouse is left with 2 years of benefits, or whatever your spouse uses 5 years, you're left with 3. This can be a lot more affordable than buying two separate policies, even an individual policy. And I'll just give you a personal example. So my husband and I looked into long-term care insurance and met with an independent agent a couple years ago, and the cost of a shared benefit policy for the both of us was around $300 a month. If I bought a policy by myself, I would be paying close to that because I don't get the best rate because I had a mother with Alzheimer's disease. Otherwise, I'm a pretty healthy person. My husband qualified for the best rate because he's in good health. But with that shared benefit policy, it would cost us less than for me just buying an individual policy for myself, or really about the same. Um, another way to keep down the cost is to take advantage of tax incentives. There are a whole range of tax incentives. Some states will offer deductions. If you have a health savings account where you have been stashing money to pay for medical costs, then you can use money in a health savings account to pay long-term care premiums. If you have your own business, you're self-employed, then sometimes you can deduct the cost that you pay, the amount that you pay for long-term care, been a long-term care policy. And so there are a variety of tax incentives that can help keep down the cost of long-term care insurance. Um, you can opt for a lower benefit. If you want to get ample coverage, then you're going to have to pay more for it. And then finally, how do you buy long-term care insurance? Work with an independent insurance agent who specializes in long-term care insurance. You don't want to, like, let's say you have your homeowner's insurance through Nationwide, or you get coverage, you have some other a life insurance policy through John Hancock. If you work with an agent who just represents one company, you're not going to get a good comparison of all the options that are available to you. If you work with an independent agent, they're going to get quotes for you from a variety of different insurance companies and help you find the best policy at the best rate. And if you go to aaltci.org, you can find an independent insurance agent with their database. Now, I mentioned that there are a variety of ways that you can use life insurance to pay for long-term care. There is a relatively new product on the market that is called hybrid life insurance. This combines life insurance, permanent life insurance, with a long-term care benefit. Now, typically when you buy life insurance, you have two options. You can get a permanent policy that stays in force throughout your entire life as long as you pay those policy premiums, or there's a term life insurance policy where it's in effect for a certain term, maybe 20 years, 15 years, 30 years, depending on what term you buy. These hybrid life insurance policies are only available through permanent life insurance policies. It solves the problem that traditional long-term care insurance has, which is that it is a use it or lose it proposition. If you don't use long-term care insurance, essentially you have put money into a insurance policy that you didn't need. And a lot of people don't like the idea of that. And so with these hybrid life insurance policies, if you need long-term care. There is a long-term care benefit that will pay out and help cover the cost of that care. If you don't ever need long-term care, then your beneficiaries will get the death benefit from that life insurance policy when you die. So someone's going to get money out of this insurance policy one way or the other. The pros of these hybrid life insurance policies is that the premiums are guaranteed not to increase. It can be easier to qualify for hybrid life insurance policies than long-term care policies. Oftentimes, people will be older when they apply for hybrid life insurance policies. The benefits can be used to pay for a family caregiver. Oftentimes, you cannot use traditional long-term care insurance benefits to reimburse a family caregiver. So these are some of the pros that make these policies really appealing to a lot of people, and it explains why they're a lot more popular today than traditional long-term care insurance policies. However, there are cons. They're not going to give you the best coverage for your money. You're going to pay a lot more for a hybrid life insurance policy than you will for a traditional long-term care insurance policy, and you're not going to get as robust of long-term care benefits with that hybrid policy. There can be a longer waiting period before coverage kicks in, and so you might have to wait at least 90 days of needing long-term care before that policy benefits are going to start to pay out. Doesn't always include inflation protection, which is a really important feature that traditional long-term care insurance policies have. So when you buy the policy, you can pay a little bit extra to get inflation protection, and the value of that traditional long-term care insurance policy is going to increase with time because, as you probably might have guessed, the cost of long-term care insurance does go up, just like the cost of everything goes up. But long-term care can really increase in price as the years go on, and it might be a lot more expensive now in the future when you need it than what it's going to cost now. And so some of these hybrid policies don't always include inflation protection. There are fewer tax benefits, and if you do use those long-term care benefits, it's going to reduce that death benefit that gets paid out to your beneficiaries when you die. Just to give you an idea of how much more these hybrid policies can cost, the annual premium for a 55-year-old man who buys a policy with $180,000 in long-term care benefits and $120,000 death benefit, $4,625. So that's nearly 5 times as much as that traditional long-term care insurance policy with about the same amount of long-term care benefit. For a 55-year-old man who wants to get a policy with that inflation protection, a 3% inflation protection, so it's going to grow in value over time, that's $6,300. For a woman, and you might notice this is a little bit different because women, the cost of a hybrid policy can actually be a little bit cheaper than the cost for men because of that life insurance component. And so women tend to live longer than men, and so they kind of get a bit of a discount here. They're going to pay $4,600 for an annual premium for $180,000 in long-term care benefits and $120,000 in death benefits. $6,750 if they want to add that 3% inflation protection. It's going to cost more because they're increasing the value of that long-term care coverage, which women are more likely to need. Other ways that you can use life insurance to pay for long-term care. If you or your loved one has a permanent life insurance policy, a whole life policy, universal life policy with cash value, you can use the cash value in that policy. You can access it through a loan or by, essentially just cashing out the policy. You can convert a permanent life insurance policy into a hybrid policy in some circumstances. You can sell a life insurance policy through a process called a life settlement. Typically, you need to be 65 years or older to sell your life insurance policy through a life settlement. And when you do this, you're going to get more than the cash value of a permanent life insurance policy. It's not going to be as much as a death benefit that would be paid out, but more than that cash value. And so it can be a way to get more money than just tapping the cash value in a permanent life insurance policy. If you happen to have a term life insurance policy, most of these policies have what is called an accelerated death benefit that allows you to get up to 50% of the death benefit if you are terminally ill. And so these are a variety of ways that you can use life insurance to pay for long-term care if you don't have a long-term care insurance policy. And you haven't planned for long-term care and you do have that life insurance, there's some ways to get money out of that policy. Another way to pay for long-term care is with a long-term care annuity. An annuity is actually an insurance product. You make a lump sum payment. So you pay down, let's say, $100,000. And what you get in return when you buy that annuity is a guaranteed stream of payouts over a specified period of time. The total payout that you will get will be more than the amount you invested with these long-term care annuities. So let's say you put in $100,000, so you might get $200,000 in long-term care benefits paid out over time. This can be a good option if you do not have long-term care insurance, you do have cash that you can invest, and you don't qualify for long-term care coverage or a hybrid life insurance policy because health and age aren't factors when buying an annuity. And if you have already been diagnosed or your loved one has already been diagnosed with Alzheimer's disease or some sort of related dementia or some sort of chronic health condition that requires long-term care, then you can get a medically underwritten immediate annuity, and it will start paying out those monthly benefits immediately, and it will pay out larger monthly benefits because you have already been diagnosed with a terminal illness. And so this can be an option for people who need immediate long-term care and they have that cash on hand to make the investment, and then they will get a higher return on their investment. And it's safer than investing in the stock market because you're going to get a guaranteed return. Another option is a reverse mortgage. And this is an option that you would consider if you want to remain in your home. If you are looking for money to pay for an assisted living facility, a memory care facility, then you could sell your home and take the cash from that home sale to pay for care. But if you want to receive care at home, then you can tap the equity in your home through a reverse mortgage. You must be at least 62 years old and you must own your home outright or have paid off most of your mortgage. The amount you can borrow is based on your age, the interest rate that you qualify for, and the value of your home. Now you can get the reverse mortgage in a lump sum. You can get it in monthly payments or as a line of credit so that you can take out money when you need it and as much as you want or as little as you need. This is a loan. It does accrue interest. It must be paid back when the house is sold or when the homeowner moves out or dies. So the pros, the money can be used however you need it to pay for care, to pay for medical expenses, to pay for home modifications, and the co-borrower on the loan. So if you have a spouse or a partner who borrows money through a reverse mortgage, that co-borrower can remain in the home if you have to move out and move into, let's say, an assisted living facility. But there are a lot of cons to reverse mortgages, and this is not ideal for everyone. And really, you need to be talking with a financial advisor before you make the decision to take out a reverse mortgage. They can have really high fees. They are incredibly complex. Oftentimes they are deceptively marketed. And so you need to make sure you know what you're getting into when you are getting a reverse mortgage. You must continue to pay your property taxes, your homeowner's insurance. You must maintain the property, and you could outlive the loan. Also, there's probably not going to be any profit, any equity left in the home when you sell it. And so there's not going to be any profit for your family members, your heirs, when you die or when the home is sold. So you've got to weigh the pros and cons carefully of this option. And it's not an ideal option for a lot of people for this reason. You can pay out of your own pocket, but here are some things that you need to know. You might think, well, I've got plenty of retirement savings. I've got Social Security. I've got a pension that can help pay for my care. And indeed, Social Security can help pay for your care. My mother's monthly Social Security benefit helped pay for half of the cost of care when she was in a memory care facility. She was paying around $4,500 a month, and her Social Security benefit paid for about half of that. But here's the thing, the average Social Security benefit is $1,614 a month. That's $19,370 a year. That's certainly not going to cover the full cost of care in most situations. Withdrawals from retirement plans, such as an IRA or a 401k, those are subject to income tax. And so taxes are going to eat into those savings when you withdraw them. So you need to pay, let's say, $50,000 a year to cover the cost of care. You're going to have to withdraw more than that to cover the tax bill. So this is something to keep in mind if you're going to be relying on retirement savings. Also, if you need to start making withdrawals before the age of 59 and a half, there is a 10% early withdrawal penalty. If you are counting on investments in a brokerage account, let's say you just have stocks in a brokerage account or mutual funds or bonds, you're going to have to pay possibly capital gains taxes on those investments when you sell them to pay for care. And it's also important to consider if you have a spouse or a loved one or another family member who is counting on your Social Security benefits, your pension, your retirement savings to support themselves in retirement, and you're going to use all of those sources to pay for your care, how is that person going to support themselves? There needs to be another source of money to pay for long-term care than Social Security, pension, retirement savings, if someone else is counting on that money to support themselves. If you or your spouse is a veteran, then there are some veterans benefits that can help pay for long-term care. Veterans can get nursing home care if they have a service-related disability. Those with a long-term care need that isn't service-related might qualify for the VA's Aid and Attendance Program that provides an increased monthly pension to cover the cost of care at home for veterans and their spouses. There's also a veteran-directed care program that provides a flexible budget for home or community-based care. And then there is Medicaid, which actually is the top payer in the nation for long-term care services. It is a joint federal and state program. So the type of services and eligibility requirements are going to vary from state to state. All state Medicaid programs will cover the cost of care in a nursing home for those who meet the eligibility requirements. But here's the thing. A lot of times when you need long-term care, you don't need skilled nursing care from the get-go. At first, you might just need help with running errands, keeping the house clean, helping you with money management. Skilled nursing care really is what people need when they get to a point when they cannot care for themselves at all, when they might be bound to a bed, when they need round-the-clock medical assistance. Okay. And so Medicaid often will not pay for that care that you might need in the early stages of dementia, Alzheimer's, or any other chronic condition. In some states, there are waiver programs that do allow people to receive care at home or in a facility other than a nursing home. And Medicaid in some states will even pay family caregivers. But like I said, this varies from state to state. And so you might happen to be in a state where Medicaid will only pay for nursing home care. not care at home, not an assisted living facility. So it's not something you can necessarily count on to cover the cost of care through all of your stages of care needs. Qualifying for Medicaid can be incredibly difficult. For starters, there are income requirements. You've got to have very limited income, very limited assets to qualify. The income limit does vary from state to state, but it's typically around $2,382 a month. The asset limit is typically $2,000 a month. A primary home, an automobile, and some other assets are exempt. And if you are married, a spouse can typically keep half of the marital assets up to $130,000, $130,380. You can spend down assets or transfer assets to qualify for Medicaid, but it's tricky. And this is really not a DIY prospect. If you want to spend down assets to qualify quickly, if you want to transfer assets, you need to work with an elder law attorney who specializes in Medicaid planning. Even just applying for Medicaid can be difficult. Navigating the system can be challenging. And so, again, it can be helpful to work with an elder law attorney, even just to apply and qualify for Medicaid. And the other thing to keep in mind is that you get little choice in where you receive care. Not only can you be limited to a nursing home, but it's not necessarily going to be the nursing home of your choice because it has to be a Medicaid approved facility, and there can be long wait lists to get in those facilities. And those facilities, like I said, might not be your top choice of where you would want to receive care. And so it is an option. There are steps you can take to plan to qualify for Medicaid, but it's not the ideal option. And so all of these other options I mentioned already allow you to have more choice in the type of care you receive and how you receive that care than Medicaid does. So considering that long-term care can be so expensive and the options to pay for care can also be expensive, long-term care insurance, life insurance, annuities, all of these things cost money. Wouldn't it just be easier to rely on family to provide your own care? And a lot of people do because long-term care is expensive. But here's the thing that you should keep in mind. If you're thinking about relying on family for care, your family members might not have the physical, emotional, or financial means to provide hands-on care for you. You might think, well, I'm married. My spouse is going to take care of me. Well, if you need care and you're in your 80s, your spouse might not have the strength to help you get up and down the stairs, to help you get out of bed, to help you bathe. If you're relying on your kids to provide your care, ask yourself, do I really want my kids bathing me? Do I really want my kids helping me go to the bathroom? This might not be something that you want, and that might not be something that they want to do. They might love you, but they might not want to help you take a bath every day. Here's another thing to keep in mind too. Your family members won't have the training to meet your care needs, especially if you have medical needs. You would not send yourself or a loved one to a hospital where the nurses and doctors aren't trained. But when you're relying on family to provide your care, they're not trained in how to help get you in and out of bed, how to help dress you, how to help even make you take your medicine. Because if you do develop dementia, your personality can change. Unfortunately, people can become combative. And so sometimes it's difficult for one person to provide care for someone with dementia because it takes multiple people to provide care. And you don't want your family to resent you. Of course, you hope that they wouldn't. They love you. They want to be able to take care of you. But when you are caring for someone full time, it's incredibly difficult. It's incredibly stressful. It can impact your health. And so resentment can occur naturally. And you don't want to resent your family members, especially your adult children who have to step into a parenting role. I mean, it was incredibly difficult for me to help care for my mom because I hated having to tell her what to do. I hated feeling like at times I was the parent. It was a role that I did not want to be in. Now, it's okay to rely on family to coordinate your care and to oversee your finances, but you don't want to ask them to make promises they can't keep. That's why it really is so important to have a plan to pay for long-term care and to start planning well before you ever need care so that there are the financial resources to pay for the care that you might need and the care that you deserve. When you are going through this process of planning for long-term care, there are some professionals who can help. Like I mentioned before, work with an independent insurance agent. You can find one through the American Association for Long-Term Care Insurance. Consider working with a fee-only fiduciary financial advisor. Fee only means that they're not going to make money based on commissions through products they sell you. They're going to charge a fee. Fiduciary means that they are legally required to work in your best interest. You can find fee-only fiduciary financial advisors through the National Association of Personal Financial Advisors. You can also find financial advisors through the Financial Planning Association. And if you or your loved one who's looking into long-term care cannot afford to hire a financial advisor, there are some who work on an hourly basis. And so you can meet just a couple of times so they can review your resources and figure out how to help you pay for care with the resources you have. And the Financial Planning Association has state chapters, and you can reach out to that state chapter and find out if they have members who are willing to do pro bono work, because a lot of them are. And so they can provide free or very low cost financial planning help for you. Consider working with an elder law attorney who can help with the Medicaid planning process or who can help you qualify for VA benefits. Also, you can reach out to the Area Agency on Aging. If you go to eldercare.acl.gov, you can find the Area Agency on Agency in your town, and they can help connect older adults with support services. You know, even there can be services that can help with that Medicaid application, VA benefit applications, you know, help identify other services that might be available to provide in-home care, low cost in-home care in your community. So there are a lot of resources out there. And I do think that if you can afford to work with professionals, there are a lot of benefits to working with experts who can help you figure out how to pay for long-term care that's going to fit within your budget. Here are a couple different resources, some articles that I've written on how to pay for long-term care, what to know about long-term care insurance. You can find all of these articles actually at Get Careful, and that's GETCAREFULL.com. As I mentioned earlier, I am the Director of Education and Content at Careful, and these are all articles that I've written that you can find there on our blog. And I'm going to turn this back over for questions if you have any. I know I went through this pretty quickly and it's all pretty complicated, but I hope it made some sense to you.
Hi, Cameron. Thank you so much. I will let our viewers know that we did record your presentation because I think it's the kind of thing that I need to watch over and over again. There's so much information there and so much to understand. So I'm glad that you shared the website where we may be able to get more information or dig a little bit deeper into the areas that we were most interested in. And I just want to make sure that we got that website right at getcareful with 2 L's
Yes,
.com. Is that correct?
that's
Okay.
correct.
Gosh, well, thank you so much. We do have a few questions, several questions that have come on, and I don't know if all of them are appropriate for you, but I'll give them a shot anyways. Um, this one you may not know what the employer is providing, but says this person has an option for long-term care insurance through work. How early would you advise someone starting to pay into that? And would it be worth still shopping around, or is there a benefit to going through my work benefits if you are aware? Do you have any answers to
Yes, I can
that?
answer that question. And so if you have an employer who offers long-term care benefits, you're lucky. It can be a great way to get long-term care insurance. Typically, if it's group coverage, the cost can be lower. But here's a really important question that you need to ask your employer. Can I take the policy with me when I leave? It might not be possible for you to do that. Oftentimes, for example, when insurers offer life insurance through work, you can't take that policy with you. They might give you an option to, essentially transfer that policy into an individual policy and take it with you, but there's going to be a cost to that. And so find out what the terms of this policy are and whether you can take it with you when you leave. It's also important to understand what the scope of the benefits are, because you might actually be able to perhaps pay a little bit more to get more robust benefits if you buy an individual policy. And so, sure, shop around. You can get a free quote from an independent insurance agent. They're going to ask you questions, and it'll be essentially a ballpark estimate of what you're going to pay. Then you'll have to go through the underwriting process where there are medical tests that are done and a lot longer application, a lot more questions you'll have to answer to get your actual rate that you'll pay. But it doesn't hurt to shop around. How young should you be when you start, or how young is too young? Really, that's up to you. If you are in good health, if you anticipate remaining in good health because you have an active lifestyle, you eat well, you don't have a history of chronic conditions in your family, then you might be fine waiting until your 50s. If you're not in perfect health, then don't wait. Don't wait for your health to get worse. If you have a lot of chronic conditions in your family that tend to be genetic, high blood pressure, high cholesterol, again, you might want to think about applying for long-term care insurance when you are younger, in your 40s, maybe in your 30s even. But like I said, the premium is going to be lower when you're younger, but you're going to be paying it for a longer period of time.
Okay, thank you so much. I will let our callers know that we are going to be sending out the recording automatically to all who registered. So if you're putting your email address or whatnot in the chat, we're not going to take it down at this time. If you have any questions, or if you want this email sent to someone who didn't register, you can email us back at the invitation you received. There's an email address. I believe it's COMM for communications at belmontvillage.com. So just take a look at your invitation. You can send us any questions you want there. Okay, Cameron, moving on to our next question. What is considered long-term care? Would independent senior living be covered under long-term care insurance? And I want to add my own part to this because, for example, at Belmont Village, while some of our communities offer independent living, our whole umbrella of the whole entire building is licensed as assisted living. So do you have an answer for us on that one?
Well, if it is truly independent senior living, then no, it typically would not cover it unless you are living in your own home condominium unit and you have had to bring in someone to provide assistance with those activities of daily living. As I mentioned, in order for long-term care insurance benefits to pay out, in order for Medicaid, in order for a hybrid life insurance policy to start paying out, you have to be unable to do a certain number of activities of daily living on your own. So it's the bathing, the dressing, getting in and out of bed, going to the bathroom, continence. So if you are living independently and it's part of an independent living community, then as Jackie mentioned, it might be a different situation with Belmont Village if it's all classified as assisted living. But if it is a continuum of care community and that independent living is truly independent, then no, long-term care insurance will not cover your living cost.
Okay, thank you so much for clarifying that. I have another question here for you. My husband is a retired U.S. Air Force colonel. He has long-term care insurance, but are there VA benefits he may be eligible for in addition to the insurance benefit? Would you happen to know that?
Yes, you should look into it. If he's a veteran, then he could potentially qualify for that VA aid in attendance program. And this is one of the benefits of actually working with professionals, financial advisors, especially financial advisors who specialize in long-term care planning, or the elder law attorneys, is that they can review all of the resources you have and help you determine which ones are best to use at which point. Like, he might want to take advantage of, VA benefits at a certain point, or use up those long-term care insurance benefits first, and then rely on VA benefits. Professionals can help you plan and figure out the best way to take advantage of the resources that you have.
Excellent. Okay, so looks like more questions are coming in, so we'll try to get through them. This particular person is asking if you meant 165,000, if you meant that as annual coverage.
No, that is lifetime coverage. And so, maybe it'll cover 2 years worth of care, but that's depending on where you live. But if 2 years worth of care is better than coverage for 0 years of care. And typically with long-term care insurance policies, they will have, the way it works is that you will have a certain number of years that it will pay out. Like, you'll choose to have, 3 years worth of coverage, or 4 years, or that shared benefit. Maybe it's 5 years or 8 years that you can share with a spouse or a domestic partner. And then there will be a cap on the total payout that it will pay. Sometimes it can be total amount that it will pay over time, over those 3 years or 4 years, or whatever you choose. Or it might also be like a monthly cap or a daily limit that it will pay out. And so once upon a time, you used to be able to typically get like unlimited coverage. And that's how long-term care insurance companies got into trouble, and they had all those rate increases, is because they would provide unlimited benefits for people. And then, a lot of companies stopped even offering long-term care coverage. And so, no, it's not annual. That is lifetime coverage.
Wow, okay. And how much does Medicare, Medicaid typically pay?
Medicare pays zero for long-term care. It will only pay for rehabilitative care if you have had a hospital stay, and those are for short-term rehabilitation stays. Medicaid, again, it varies from state to state. What typically it will do is, if you're getting Social Security benefits, then your Social Security benefits will go toward paying for the care, and then Medicaid will cover the rest in a Medicaid facility. But like I said, it's going to vary from state to state.
Okay, gosh, Cameron, there's so many questions coming in. I think we only have room for maybe one or two more. Someone's asking, is the cost tax deductible, partially at least?
It can be in some states. Some states do offer tax deductions for long-term care premiums that you pay. And like I mentioned, if you are self-employed or you have your own business, then you can write it off as a medical expense. And if you have that health savings account, perhaps it's offered through your employer, and you're putting money into a health savings account to pay for medical costs, then you can use money in that health savings account. That is money that has been set aside from your paycheck before taxes. So it is tax advantage to pay for long-term care premiums.
Okay, and our last question, which I think you may have answered in your slides, but this person is just referencing a particular site. But when shopping around for long-term care insurance, what are your thoughts on an insurance aggregator, sites like Policy Genius, or is it better to go through an independent agent? Is something like Policy Genius considered an independent agent?
Their aggregator sites where they will connect, essentially they have a variety of agents competing for your business. I really think the best option is to go work with an independent agent who specializes in long-term care insurance. And these will be able to sell you traditional long-term care insurance policies or those hybrid policies. And it's best to work with them because it is a niche product. And you don't want someone who specializes in all types of insurance selling you a long-term care policy, because they might not even have a good grasp of all the nuances, and they might not be able to tell you which is really best for your situation, whether it is that hybrid policy or the traditional policy. So work with an independent agent. I really think that's your best option. And I do know that someone had asked a question before that was sent over to me about a particular service called Patriot Angels that helps people with VA benefits. I don't have any experience with this company, but what I would suggest to anyone who is looking into companies, services that help people apply for VA benefits, Medicaid, any type of service that helps with long-term care, do your research. Go to the Better Business Bureau website and look up reviews of these services. Like if you and I did a quick search of Patriot Angels, there are mixed reviews. Some people say it's great, some people say it's terrible. When you are signing up for these services, ask a lot, or if you're thinking about signing up, ask a lot of questions. What is the charge? You might be offering me a free consultation, but how much do I pay and what do I get for that? What is your refund policy? Make sure you know what you're getting into before giving anyone your money. And I do really think that still, if it comes to VA benefits or applying for Medicaid, working with that elder law attorney who specializes in planning for those programs is really your best option.
Thank you so much, everyone. Thank you so much, Cameron. You have been listening to Cameron Huddleston, who is not only an award-winning journalist, but an expert in personal finance. She's written books, most recently Mom and Dad, We Need to Talk, available now. And her website where you can get more information is getcareful with 2Ls.com. Again, that's getcareful with 2Ls.com. I believe you answered a lot of the pending questions that we have here with the last question. But folks, if you still have any questions, please feel free to email us at the invitation. We'll try to pass them on to Cameron and see if she can be so gracious as to shed some light on those. Cameron, we can't thank you enough. Clearly you can see that this is an area where a lot of our clientele really has a lot of questions, as do we. So we really appreciate your expertise and you being here today.
Thank you so much.
And also, folks, we have Susan Berger, our trusted family advisor, who has been in the center of helping thousands of families transition over the last 18 years. She's going to talk a little bit about Belmont Village and the difference of what our communities offer: independent living, assisted living, and 2 levels of memory care. Susan, thanks for being here.
Thank you, Jackie. And Cameron, what a wealth of information. For 25 years, Belmont Village has owned and operated best-in-class, fully licensed senior living communities. We're founded on the belief that all seniors deserve to live happy, self-directed lives in a supportive community. It's a community that's filled with new friendships and interests, safety and security, quality and value, and above all, a place that our residents call home. As Jackie mentioned, we provide independent, assisted, and memory care support. And our goal every day for every resident is to support a healthy lifestyle. We know that what we eat and drink, how much we socialize, and the way we exercise are all important to staying healthy and living a successful life. But although our residents' needs may vary, everyone can count on our caring and compassionate staff. They're committed to providing high quality, person-centered care. And with that person-centered care, we all strive to learn about each resident, their past, their personal challenges, as well as their hopes and dreams for the future. And staying active at Belmont is easy and fun. Whether our residents want to kickstart their day with group fitness or one-on-one exercise, our goal is to help stimulate both their minds and bodies at whatever level they feel successful. And what better way to stay physically engaged than under the watchful eyes of our team of licensed physical therapists. They're on site, and we also have a state-of-the-art gym fully equipped with senior-friendly equipment. Most importantly, our residents and their families have added peace of mind because they know that our Belmont Village nurses, those are trained medical professionals are on site 24 hours a day to serve the healthcare needs of each resident. I get so many calls every day asking about Belmont Village's memory care support, and specifically about our Circle of Friends. Several years ago, Belmont Village developed what we call the Circle of Friends, the first of its kind, comprehensive and therapeutic program designed to support the healthcare needs and abilities of those with mild cognitive impairment or early to moderate stage memory loss. The Circle of Friends includes, among other services, a structured 7-day-a-week curriculum of mental and physical activities focused on building cognitive reserve in order to maintain brain function. And within that circle, residents are encouraged every day to stay involved, to feel successful, and to find a newfound sense of purpose. We've proven at Belmont Village that memory care does not always have to be in a secured environment. We strive to create a positive experience for all of our members. Those include our residents, our families, and our employees. And we continue to set new standards in resident and family satisfaction. But we've also been recognized as a great place to work by our over 4,000 employees nationwide. If you have any questions about a Belmont Village near you, or you'd like to learn more about Belmont's innovative approach to memory care, please give me a call, send me a text or an email. Again, my name is Susan, and I am a trusted family advisor. My phone number is 424-232-0701, and my email is sberger@belmontvillage.com. For the last 18 years, it has been my pleasure to assist families as they navigate the many options in senior living, either for themselves or for their loved one. Please have a plan. Don't wait for a crisis to react. I want to thank Cameron for presenting today and for all of you for joining. And I look forward to seeing you at our next event. Jackie, back to you.
Thank you so much, Susan, and thank you, Cameron. Thank you, everyone, for being here. We're Belmont Village. You can learn more about us at belmontvillage.com. Give Susan a call. We appreciate you tuning in today. Please stay tuned for our upcoming webinars. We are committed to our lifelong learning programs and sharing those with our residents, our families, our team, and you, the public. Stay safe out there, and we look forward to seeing you next time.
Bye-bye.
Bye, everyone.